Is the upcoming NSE IPO the ultimate long-term wealth creator or an overhyped trap? With SpaceX making global history on Nasdaq, rising $75 billion, India's national stock exchange has quietly filed its DRHP with SEBI. In this comprehensive video, we decode India's biggest potential IPO using a simple toll booth analogy.
Elon Musk's rocket company went public on the Nasdaq. $75 billion raised in a single day. Now tell me, just 5 days after that historic event, what happened in India? Something even more interesting. Fire. No rockets, no celebrity CEO, no high pays. India's own National Stock Exchange, NSE, filed its draft red herring prospectus with SEBI. Before we talk numbers, let me make sure everyone understands what NSE actually does. Because if you don't understand the business, you can't value the stock. Imagine a highway, a massive 6-lane expressway. Every day, lots of vehicles, trucks, cars, bikes drive on it. The highway company doesn't own the trucks. It doesn't sell the goods inside. It just collects a toll for every vehicle every single day without fail. NSE is that highway, and India's stock market is the traffic. Every time you buy or sell a share on the stock market, NSE charges a tiny transaction fee, a toll. And here's the magical part. As India's economy grows, more companies list, more people invest, more trades happen, and NSE collects more toll automatically. NSE is the 7th largest stock exchange in the world by market capitalization, with $4.78 trillion in India's market cap as of May 2026. Now let's address the question everyone is asking. How does NSE compare to SpaceX? SpaceX listed at a fixed IPO price of $135 per share. SpaceX is a loss-making company. It had an operating loss of $4.2 billion in 2025. NSE made a net profit of 302 crore in FY26. That's a profit margin of 55%. SpaceX is like buying a ticket to Mars. Exciting, potentially transformative. NSE is like owning the Mumbai-Pune toll booth. It may not make headlines, but every vehicle pays you. Now here's where most retail investors stop reading. But this is exactly why you must pay attention. The NSE IPO is a 100% offer for sale, OFS. No new shares are being created. NSE is not getting any of this IPO money. 0 rupees go to NSE. The money goes to the existing shareholders selling their stake. Sellers, institutions cashing out their gains. State Bank of India. The biggest seller, offloading 2.48 crore shares, Canada Pension Plan Investment Board, MS Strategic. Now, who is not selling? This is the most important. LIC, India's largest institution, owns 10.72% of NSE, and it is not selling a single share. Radhakrishnan Chandawani is not selling. Now let's get into the numbers that really matter. The NSE versus BSE comparison. Because BSE is already listed, you can see its price, its PE ratio, its valuation. NSE is 3.4x bigger in revenue and earns 4x more net profit. Its profit margin is higher at 55% compared to BSE's 48%. Here's the key insight. NSE is expected to list at roughly 35 to 45 times its FY26 earnings. BSE is currently trading at 65 to 68 times its earnings. That means per rupee of profit, NSE is significantly cheaper than BSE. BSE is like a fast-growing challenger. It deserves a premium for its growth. NSE is the undisputed champion, abundant, massive, profitable, but currently in a phase of regulatory headwinds. Scenario 1. NSE lists at a discount to BSE, say at PE 35x. Share price would be approximately 1,457 per share. Total market cap around 36 lakh to 6 lakh crore. Scenario 2. NSE lists at par with BSE at PE 65x. Share price only at 2,700 per share. Total market cap 6 lakh crore, making NSE one of India's top 5 most valuable companies. Scenario 3. NSE lists at a premium to BSE, say PE 80x. Share price offers 330 per share. Beware, at 80x earnings, the stock could see a sharp correction post-listing as reality sets in. Should I apply? Apply if you have a 5 to 7 year investment horizon. At a PE of 35 to 45x, NSE is fairly valued for what it is, the monopoly backbone of India's financial markets. Think carefully before applying if you are chasing listing date fireworks. This is a 100% of risk. No fresh money comes to NSE. OFS IPOs historically list with moderate premiums. Practical steps. Wait for the DRHP, the red herring prospectus. Compare the price plan to BSE's PE that gives you an instant valuation check. Apply in the retail category with Royal 14, 999 or 1 lot minimum. And before I sign off, let me leave you with some timeless words from the greatest investors of all time. Warren Buffett once said, "Price is what you pay, value is what you get." Peter Lynch famously said, "Know what you own and know why you own it." Today's video was about making sure you know what NSE is before you decide to own it. This is the NSE IPO, India's most anticipated listing in decades. Hit subscribe so you don't miss our analysis when the price band is out. I'll see you in the next video.